So far, the US Treasury has been a bit more of a haven than gold. Yet, let's think about the US Treasury. This is debt from the most indebted entity in the history of finance. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, just a quick video about the financial safe haven. A bit of an arbitrary definition. A lot of people call the 10-year treasury the true safe haven. A lot of people call gold the safe haven. I'm on the precious metals side of that. Although interesting just to think about some of the things that have happened. Again, you can see today Dow drops nearly 3,000 points. Worst day since 1987, and it was not pretty. But back to our safe haven talk. You can see here the US Treasury yielding 75 basis points, which means you're getting 0.75% versus gold, which let's see where we're clocking in at. Finished right at 1,500. Was down, I think, more than 16 bucks, depending on how you mark it from the close. You see 33.70 on the Kitco chart. Yet, if the whole world is melting down financially, which I mean, it kind of is, we've seen an incredible treasury rally over the past month. Got up to 0.3% yield last week. Has backed off a little bit, as I noted, down to or back up to 75 basis points. Keep in mind that the yield is inverse to the price. So when it hit 0.3, that was the peak of the rally. It's come back down a little bit. Yet, while gold has been pummeled over the last week in particular, and it makes you wonder, well, isn't a safe haven supposed to provide safety in a time of stress, which is exactly what we're seeing now? And so far, the US Treasury has been a bit more of a haven than gold. Yet, let's think about the US Treasury. This is debt from the most indebted entity in the history of finance in the US government. And somehow, just piling into more even as the spending increases. We've already seen a lot of obligations. I see the reports this morning. Trump may be bailing out the airline industries. Again, how are they going to do that with a entity that's already bankrupt? They're going to print more money. Keep in mind, the Fed is printing money to buy treasuries. And if you look at it on a hierarchy, I mean, say you just look at cash, and if you print more of it, it goes down in value. But treasuries are actually a promise to repay cash at a later date, which makes it even more dubious. Then add on that we've actually seen dislocations in the treasury market where the bid-ask spread is widened to a degree that I've yet to find anyone who's seen that before in their lifetime to this magnitude. So far, the Treasury has acted as the safe haven, while gold, which cannot be printed, certainly having a tough day today. Silver, the same case. Yet when you think about which do you feel safer in, debt from the most indebted entity in the history of the world that's shown no ability to even make an attempt at repaying any of it and is just printing like a drunken sailor to cover it up, or gold, which is still well below its all-time highs and has gotten beaten up pretty good. Certainly, I know these are not easy times, and obviously, if you could go back a week or two in time, you may have put some different things on. But from that standpoint of, especially when one asset is at near its all-time high in the Treasury, well, the profile of that asset is what it is. While precious metals are on the lower side, have been beaten up for what I would say are at best paper trading, margin calls, or things that do not reflect true connection with the underlying value. And you're buying on the lower side. So given that we can only look at what's in front of us going forward, I mean, I guess you can look at the past, but these are where the prices are today. And certainly especially given that there's already been a physical shortage of metals in the market as the price has gotten hammered. So I expect at some point we're going to see a reversal in that. Obviously, today was not the day yet. If you are a metals holder and taking it on the chin a little bit today, certainly I can understand and appreciate that. Um, again, just remember the mortgage market got way out of line until it got corrected big time. I believe that's what we're seeing happen here today and these last couple of weeks as well. Again, just keep in mind the price of silver and gold plummeting while the actual commodity is in a shortage. Department of Justice, any thoughts on that one? So far, no. They continue their now 2-year investigation, but since they won't ask that question, I'll raise it myself, and hopefully that can at least be something worth factoring in your own decision making. So with that said, we'll wrap up for here, although do have another video coming your way that actually digs into some of the treasury dislocations that I just mentioned. So with that said, click on the box that's about to appear and you can find out more.